Do you know what to do if World War III breaks out? The simple answer is buy Bitcoin. Let's break it down, as it's not a complicated idea. Now it's no secret that China has its eyes on Taiwan, and that's more to do with semiconductors than politics, but that's another video for another time. Well, a story just broke in the Indian press about an audio leak from a top-secret Chinese military meeting discussing plans to invade the tech-rich island. We don't know if the leak is true, but it's certainly interesting to see just a few weeks after the Chinese central bank called in major companies to start preparing for potential US sanctions, and the Chinese government warned party elites to shed overseas assets. So what does this mean for Bitcoin? Well, let's take a look at the price reaction to Russia's invasion of Ukraine as Russians poured assets into Bitcoin to avoid incoming sanctions. On the left, we have Bitcoin priced in Russian rubles, and on the right, the dollar. Now, this was only a temporary trade, and yes, we have the potential for a global conflict between nuclear powers, supply chain famine, and the end of Western civilization. But the market is much more scared of the Fed, and Bitcoin tanked as soon as rates raised, and balance sheet reductions were whispered. Yes, that's right, "Don't fight the Fed" is not just a phrase for uncles. The red button on Constitution Avenue is much more powerful than anything in the Oval Office, the Kremlin, or Beijing. And that's the bottom line, whether we like it or not. A few days ago, we said the market is squashed between a bearish macro outlook and bullish institutional adoption, and we need a catalyst. Well, let's walk through a scenario. Unlike the Ukraine, the US has committed to participating in the conflict if the Chinese were to invade Taiwan. That's a huge difference for several reasons. For one, China is not Russia. We assume the sanctions swerve trade would be much bigger. We also assume that China's military is in much better condition than Russia's Soviet-era relics. And let's be honest, while the US is comfortable outsourcing fighting the Russians, China would be a different story. So while the Fed is quite happy to raise rates and reduce its balance sheet while Ukraine burns, if the US were involved in a hot war against China, we think that tightening would be put on hold and maybe even reversed. The crucial point here is that any Chinese sanctions swerving Bitcoin bounce would be followed up with the Fed turning on the liquidity tap, sending stocks and their newly correlated cousin Bitcoin higher.